I've studied many investors in this journey of mine, and one of the investors that really shaped my thinking is Ray Dalio. He is the founder of Bridgewater Associates, one of the largest hedge funds with 160 billion US dollars under management. And it's one of the investors that I think his ideas are very simplistic and easy to understand. So he talks about four seasons in the economic cycle in his book with in his interview with Tony Robbin, Money Master the Game. And these four seasons are higher than expected inflation, lower than expected inflation, higher than expected economic growth, lower than expected economic growth. Now, these different seasons, different investments works better. It's like during winter time, you wear different clothes. Kind of the same thing with these four seasons in the financial markets. So right now we're in a period of lower than expected inflation and also lower than expected economic growth, which Ray recommends that you hold certain assets or investments such as treasury bonds. These are government bonds, inflation-linked bonds, which are more common in the US, called TIPS, Treasury Inflation Protected Securities, and also stocks. Now, the idea behind this is that with lower than expected inflation, interest rates would likely remain at low levels. Central banks are less likely to raise interest rates, because there's not much inflation. This environment is good for government bonds and also inflation-linked bonds because inflation is not out of control yet, so you can sort of protect your money with the inflation-linked bonds, and with government bonds, you know that the value might remain steady. Additionally, since economic growth is slowing, there is a little upside for stocks. Therefore, it'd be wise not to hold too much. Of course, you would still like some because over the long term, stocks have been outperforming all the other asset classes like gold, bonds, real estate. So following this idea, how you can go about with your own investments is you can buy bond funds or you can also invest into StashAway's platform at the 10% risk index portfolio, which is what I did. Now, I own Affin Huang Select Bond, the fund, and it's intended, and I intend to buy more, of course, which is included into my investing portfolio. The bond has a broad exposure into Asian fixed income, corporate and government bonds. So this is a good way to diversify in terms of region. Retail investors can be charged a max of 2% as a one-time entry fee into this fund. This is if you purchase it through an agent or also through a bank. Using StashAway, you can construct a diverse portfolio that has roughly 60% in bonds, corporate, government, inflation-linked, 30% to stocks, and 10% into commodities, around that range. Now, that's if you fix the risk index to 10%. So, the idea for this type of allocation, right, is so that I can take advantage of this current situation. Because some investors, they try to time the market. Well, I'm sort of trying to do that, but I'm more following the seasons than trying to time the market of what's next. I'm looking at what's happening right now and then positioning myself right now so that I could ride along this wave and not get hurt in the process. So that's just my way of seeing things. I've also included the link to my blog, which has the most latest posts on this. There is also a link in that article to Tony Robbins' website, where he talks more about Ray's interview and about the four seasons and how he recommends investing. Right. Thanks, guys. See you soon, hopefully. Happy holidays.